Online banking is an electronic payment system that enables customers of a financial institution to conduct financial transactions on a website operated by the institution, such as a retail bank, virtual bank, credit union or building society. Online banking is also referred as Internet banking, e-banking, virtual banking and by other terms. To access a financial institution's online banking facility, a customer with Internet access would need to register with the institution for the service, and set up some password for customer verification. The password for online banking is normally not the same as for telephone banking. Financial institutions now routinely allocate customers' numbers, whether or not customers have indicated an intention to access their online banking facility. Customers' numbers are normally not the same as account numbers, because a number of customer accounts can be linked to the one customer number. The customer can link to the customer number any account which the customer controls, which may be cheque, savings, loan, credit card and other accounts. Customer numbers will also not be the same as any debit or credit card issued by the financial institution to the customer. To access online banking, a customer would go to the financial institution's secured website, and enter the online banking facility using the customer number and password previously set up. Some financial institutions have set up additional security steps for access to online banking, but there is no consistency to the approach adopted. Features: online banking facilities offered by various financial institutions have many features and capabilities in common, but also have some that are application-specific. The common features fall broadly into several categories. A bank customer can perform non-transactional tasks through online banking, including viewing account balances, viewing recent transactions, downloading bank statements, for example in PDF format, viewing images of paid checks, ordering checkbooks, download periodic account statements, downloading applications for m-banking, e-banking etc. Bank customers can transact banking tasks through online banking, including funds transfers between the customer's linked accounts, paying third parties, including bill payments and third-party fund transfers, see, for example, fast, investment purchase or sale, loan applications and transactions, such as repayments of enrollments, credit card applications, register utility bills and make bill payments. Financial institution administration, management of multiple users having varying levels of authority, transaction approval process. The process of banking has become much faster. Some financial institutions offer unique Internet banking services, for example, personal financial management support, such as importing data into personal accounting software. Some online banking platforms support account aggregation to allow the customers to monitor all of their accounts in one place whether they are with their main bank or with other institutions. History. The precursor for the modern home online banking services were the distance banking services over electronic media from the early 1980s. The term online became popular in the late 80s and referred to the use of a terminal, keyboard and TV to access the banking system using a phone line. Home banking can also refer to the use of a numeric keypad to send tones down a phone line with instructions to the bank. Online services started in New York in 1981 when 4 of the city's major banks offered home banking services. Using the videotex system. Because of the commercial failure of videotex, these banking services never became popular except in France, where the use of videotex was subsidized by the telecom provider, and the UK, where the Prestel system was used. When the clicks and bricks euphoria hit in the late 1990s, many banks began to view web-based banking as a strategic imperative. The attraction of banks to online banking are fairly obvious: diminished transaction costs, easier integration of services, interactive marketing capabilities, and other benefits that boost customer lists and profit margins. Additionally, web banking services allow institutions to bundle more services into single packages, thereby luring customers and minimizing overhead. A mergers and acquisitions wave swept the financial industries in the mid and late 1998s, greatly expanding banks' customer bases. Following this, banks looked to the web as a way of maintaining their customers and building loyalty. a number of different factors are causing bankers to shift more of their business to the virtual realm. While financial institutions took steps to implement e-banking services in the mid-1990s, many consumers were hesitant to conduct monetary transactions over the web. It took widespread adoption of electronic commerce, based on trailblazing companies such as America Online, Amazon.com and eBay, to make the idea of paying for items online widespread. By 2000, 80% of U.S. banks offered e-banking. Customer use grew slowly. At Bank of America, for example, it took 10 years to acquire 2 million e-banking customers. However, a significant cultural change took place after the Y2K scare ended. In 2001, Bank of America became the first bank to top 3 million online banking customers, more than 20% of its customer base. In comparison, larger national institutions, such as Citigroup, claimed 2.2 million online relationships globally, while J.P. Morgan Chase estimated it had more than 750,000 online banking customers. Wells Fargo had 2.5 million online banking customers, including small businesses. Online customers proved more loyal and profitable than regular customers. In October 2001, Bank of America customers executed a record 3.1 million electronic bill payments, totaling more than $1 billion. In 2009, a report by Gartner Group estimated that 47% of U.S. adults and 30% in the United Kingdom bank online. The UK's first home online banking services known as Homelink was set up by Bank of Scotland for customers of the Nottingham Building Society in 1983. The system used was based on the UK's Prestel ViewLink system and used a computer, such as the BBC Micro, or keyboard connected to the telephone system and television set. The system allowed online viewing of statements, bank transfers and bill payments. In order to make bank transfers and bill payments, a written instruction giving details of the intended recipient had to be sent to the NBS, who set the details up on the Homelink system. Typical recipients were gas, electricity and telephone companies and accounts with other banks. Details of payments to be made were input into the NBS system by the account holder via Prestel. A check was then sent by NBS to the payee and an advice giving details of the payment was sent to the account holder. BACS was later used to transfer the payment directly. Stanford Federal Credit Union was the first financial institution to offer online internet banking services to all of its members in October 1994. Today, many banks are internet-only banks. Unlike their predecessors, these internet-only banks do not maintain brick-and-mortar bank branches. Instead, they typically differentiate themselves by offering better interest rates and more extensive online banking features. First online banking services in the United States, according to Banking and Finance on the Internet, edited by Mary J. Cronin, online banking was first introduced in the early 1980s in New York. Four major banks, Citibank, Chase Manhattan, Chemical and Manufacturers Hanover, offered home banking services. Chemical introduced its Pronto services for individuals and small businesses in 1983. It allowed individual and small business clients to maintain electronic checkbook registers, see account balances, and transfer funds between checking and savings accounts. Pronto failed to attract enough customers to break even and was abandoned in 1989. Other banks had a similar experience. Online banking in the UK, almost simultaneously with the United States, online banking arrived in the United Kingdom. It was the Nottingham Building Society that in 1983 introduced Britain's first electronic home banking service through a joint venture with Prestel, a computerised information service owned by British Telecom. The UK's first home online banking services known as Homelink was set up by Bank of Scotland for customers of the Nottingham Building Society in 1983. The system used was based on the UK's Prestel ViewLink system and used a computer, such as the BBC Micro, or keyboard connected to the telephone system and television set. The system allowed online viewing of statements, bank transfers and bill payments. In order to make bank transfers and bill payments, A written instruction giving details of the intended recipient had to be sent to the NBS, who set the details up on the Homolink system. Typical recipients were gas, electricity and telephone companies and accounts with other banks. Details of payments to be made were input into the NBS system by the account holder via Prestel. A check was then sent by NBS to the payee and an advice giving details of the payment was sent to the account holder. BACS was later used to transfer the payment directly. Stanford Federal Credit Union was the first financial institution to offer online Internet banking services to all of its members in October 1994. Today, many banks are Internet-only banks. Unlike their predecessors, these Internet-only banks do not maintain brick-and-mortar bank branches. Instead, they typically differentiate themselves by offering better interest rates and more extensive online banking features. Banks and the World Wide Web. In the 1990s, banks realized that the rising popularity of the World Wide Web gave them an added opportunity to advertise their services. Initially, they used the web as another brochure, without interaction with the customer. Early sites featured pictures of the bank's offices or buildings, and provided customers with maps of branches and ATM locations, phone numbers to call for further information and simple listings of products. Interactive banking on the web. Wells Fargo was the first U.S. bank to add account services to its website, in 1995. Other banks quickly followed suit. That same year Presidential became the first bank in the United States to open bank accounts over the Internet. According to research by Online Banking Report, by the end of 1999, less than 0.4% of households in the U.S. were using online banking. At the beginning of 2004, some 33 million U.S. households were using one form or another of online banking. 5 years later, 47% of Americans were banking online, according to a survey by Gartner Group. Regulations. Since its inception, online banking in the U.S. has been federally governed by the Electronic Funds Transfer Act of 1978. Security. Security of a customer's financial information is very important, without which online banking could not operate. Financial institutions have set up various security processes to reduce the risk of unauthorized online access to a customer's records, but there is no consistency to the various approaches adopted. The use of a secure website has become almost universally adopted. Though single password authentication is still in use, it by itself is not considered secure enough for online banking in some countries. Basically, there are two different security methods in use for online banking. The PIN-TAN system, where the PIN represents a password, used for the login, and TANs representing one-time passwords to authenticate transactions. TANs can be distributed in different ways. The most popular one is to send a list of TANs to the online banking user by postal letter. Another way of using TANs is to generate them by need using a security token. These token-generated TANs depend on the time and a unique secret, stored in the security token. More advanced TAN generators also include the transaction data into the TAN generation process after displaying it on their own screen to allow the user to discover man-in-the-middle attacks carried out by Trojans trying to secretly manipulate the transaction data in the background of the PC. Another way to provide TANs to an online banking user is to send the TAN of the current bank transaction to the user's mobile phone via SMS. The SMS text usually quotes the transaction amount and details. The TAN is only valid for a short period of time. Especially in Germany, Austria and the Netherlands, many banks have adopted this SMS TAN service. Usually online banking with PIN TAN is done via a web browser using SSL-secured connections, so that there is no additional encryption needed. Signature-based online banking, where all transactions are signed and encrypted digitally. The keys for the signature generation and encryption can be stored on smart cards or any memory medium, depending on the concrete implementation. Attacks. Attacks on online banking used today are based on deceiving the user to steal login data and valid TANs. Two well-known examples for those attacks are phishing and pharming. Cross-site scripting and Keylogger Trojan horses can also be used to steal login information. A method to attack signature-based online banking methods is to manipulate the used software in a way that correct transactions are shown on the screen and fake transactions are signed in the background. A 2008 U.S. Federal Deposit Insurance Corporation technology incident report, compiled from suspicious activity reports banks file quarterly, lists 536 cases of computer intrusion, with an average loss per incident of $30,000. That adds up to a nearly $16 million loss in the second quarter of 2007. Computer intrusions increased by 150% between the first quarter of 2007 and the second. In 80% of the cases, the source of the intrusion is unknown, but it occurred during online banking, the report states. Another kind of attack is the so-called man-in-the-browser attack, where a Trojan horse permits a remote attacker to modify the destination account number and also the amount. As a reaction to advanced security processes allowing the user to cross-check the transaction data on a secure device, there are also combined attacks using malware and social engineering to persuade the user himself to transfer money to the fraudsters on the ground of false claims. Users should therefore never perform bank transfers they have not initiated themselves. Countermeasures. There exist several countermeasures which try to avoid attacks. Digital certificates are used against phishing and pharming. In signature-based online banking variants, the use of Secoda card readers is a measurement to uncover software-side manipulations of the transaction data. To protect their systems against Trojan horses, users should use virus scanners and be careful with downloaded software or email attachments. In 2001, the U.S. Federal Financial Institutions Examination Council issued guidance for multi-factor authentication and then required to be in place by the end of 2006. In 2012, the European Union Agency for Network and Information Security advised all banks to consider the PC systems of their users being infected by malware by default and therefore use security processes where the user can cross-check the transaction data against manipulations like, for example, SMS TAN, where the transaction data is sent along with the TAN number, or standalone smart card readers with a known screen including the transaction data into the TAN generation process while displaying it beforehand to the user to counter man-in-the-middle attacks. See also, Current Account, Enhanced Telephone, Guide to E-Payments, Mobile Banking, Online and Offline, SMS Banking, Single Sign-On, Telephone Banking, References. External links, Gandhi, T. Banking and eSpace, The Banker, 145, ppA 74 €76. Tan, M. Teo. TS Factors Influencing the Adoption of Internet Banking, Journal of the Association for Information Systems, 1, ppA 1 €42.